Hello students, in our previous lecture we are solve a practical problem number 5 on computation of income from salary or total taxable income from salary. In our today's lecture we are going to solve a practical problem number 6 on computation of total taxable income from salary. So here problem number 6 is given in front of your screen, that is Mr. Ajit Kumar Jadhav, a managing director of Alpha India Limited, Delhi, receives the following salary and perquisites from his employer during the previous year 2019-20. Okay, so Mr. Ajit Kumar Jadhav is a managing director of Alpha India Limited company in Delhi. Okay, and he receives the salary and perquisites from the employer during the previous year 2019-20. So here first one is basic salary per annum given. Okay, basic salary rupees 66,000 per annum. Per annum means yearly the SSC will get a 66,000 rupees as a basic salary, basic pay. Then bonus 18,000 per annum. Okay, 18,000 per annum. Then DA enters into retirement benefit. It means consider for retirement benefits rupees 2,000 per month. Okay, so here DA received 2,000 per month. We have to compute salary for a year, so DA is converted into a year. Okay, month, from month to a year. Then commission on sales at 4%. Okay, so it is very important, commission on sales at 4%, turnover of rupees 18 lakh 50,000. So compute a 4% commission on 18 lakh 50,000. Then advance salary, so advance salary of April to July rupees 22,000, so it is taxable. Then employer contribution towards recognized provident fund 18,000. So we have to compute a 12%. If this contribution is more than 12%, then up to 12% the contribution is exempted and remaining contribution is taxable. So remember the tax treatment. Here a percentage is not given, so we have to compute a recognized provident fund of employer contribute towards the employees recognized provident fund. So we have to find out first of all the employer's contribution up to 12%. If this 18,000 is more than 12%, then the balance or up to 12% is taxable. If this 18,000 is within 12%, is up to 12%, then it is exempted. Remember the tax treatment for recognized provident fund. Then interest credited in RPF 13% rupees 13,000. So here remember the tax treatment for interest credited to the RPF, that is 9.5% is exempted, up to 9.5%. So here interest is credited to the RPF is 13%, so above 9.5% is taxable. Okay, so we have to compute a exempted interest. Then a rent-free furnished house in Delhi, rent of furnished house paid by employer. It means the accommodation is not owned by the employer. Okay, the employer has paid a rent of house which is provided to the employee rupees 84,000 and rent of furniture rupees 18,000. Okay, so we have to compute a rent free furnished accommodation, but accommodation is not owned by employer. So we have to compute a accommodation by applying second rule, that is valuation of accommodation. Accommodation is not owned by employer, then actual rent paid or 15% of salary, and then we add whichever is less, then we add a cost of furniture, that is 10% cost of furniture, we get a rent free furnished accommodation. Then the employer has provided a free services to the employee, for example here, sorry, he has provided, it means employer has provided a free services to the employee such as gardener, cook and watchman, salary of rupees 4000 per annum, rupees 3000 per annum, rupees 900 per annum respectively. So salary paid by the employer to the facilities provided by the employee, so all taxable. Then Mr. Jadhav has two children are studying in the school run by employer, it means it is a perquisite of education facility. So remember the perquisite of education facility, the education facility perquisite says that the 1000 rupees is exempted if the SSC child is studying in the school of employer, and no restrictions on the children. Okay, no restriction on maximum children. Okay, so here 1000 is exempted for two children. Then electricity bill paid by the employer, then it is add in the salary of the SSC fully taxable perquisite. He has been provided, so motor car is provided 1800 cc car for both official and private purpose. The assessed pay the running and maintenance expenses for the personal use. So here the SSC assessed pay the running and maintenance of maintenance. So here car is owned by the employer and expenses paid by assessed means SSC. Okay, so here by mistakenly assessed, so here SSC. The car expenses, the SSC pays the running and maintenance expenses of the car for personal use. So we have to compute a car facility, but car is owned by employer and expenses is paid by the employee. Car is used for both the purpose. Then we value the motor car cc we will taken into consideration. We think on the car SSC, car cc, that is below 1.6 cc, above 1.6 cc. So here car is above 1.6 cc, 1800 cc. Okay, it means it is above 1.6 cc. We have to compute a car facility by 2400 per month. So 2400 multiplied by 12, we get 28800 is the value of car. It is very easy, just remember the rules. Okay, then the SSC is provided with free lunch. Okay, so free lunch, it is a perquisite and free lunch is provided during the office hours. So 250 lunches, rupees 70 each, so 50 per lunch is exempted. So 250 into 50, got it, 250 into 50 is the exempted lunch during the working days. Okay, then he paid professional tax and he paid life insurance premium. So life insurance premium is taken into consideration from deduction under section 80C. It is a contribution of SSC. It is not taken into consideration while computing the income from salary. Now we solve this problem. So here solution, that is computation of here computation of income from salary. Then name of SSC, so name of SSC is Ajit Kumar Jadhav. Okay, then here assessment, here assessment, here 2020-21. then previous year 2019-20. then prepare A3 column, then prepare A3 column, here prepare A3 column, that is particulars rupees particulars 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 rupees. Then here basic pay, basic salary is given, salary, okay, basic salary amounted to rupees 66,000, okay, per annum. We directly put the 66,000 in outer column. So here we directly put the figure in outer column 66,000. Then next one is profit profit bonus 18,000 per annum, 18,000 per annum. Then next profit bonus. Then next DA enters into retirement benefit, so DA 2,000 per month, 2000 multiplied by 12. Here we get 2000 multiplied by 12 is equal to 24,000. Then next one is commission 4% on, so here 4% commission. So compute 4% on 4 divided by 100 multiplied by 18,50,000 is equal to 74,000. 74,000 is the commission. Then next advance salary. So advance salary fully taxable 22,000. Advance salary 22,000. Then next employer contribution to RPF. So we have to compute a contribution 18,000, okay. So 18,000 is the employer contribution to RPF, okay. So first of all we have to compute salary. So here working note first, that is employer contribution to RPF. So here first of all salary is equal to basic salary plus DA. So DA consider for enters into retirement benefit, so all DA is considered here, okay. Then plus commission on sales, that is 4% commission. We have to compute a commission. Here we get a salary is equal to basic pay 66,000 plus DA applicable 24,000 plus commission 74,000. is the salary for RPF. So 1,64,000 is the total. Now compute a 12%. So here we find out a employer's contribution. So exempted contribution to RPF up to 12%. So up to 12%. So compute a 12% up to 12%. So here compute a 12% on 1,60,000. 12% up to 12% of salary. Got it? Up to 12% of salary. That is that is 12 divided by 100 multiplied by 1,64,000. So here we get 19,000 is equal to 19,680 is the employer's contribution. So here employer contribute rupees 18,000. So 18,000 is below 12%. Okay, 18,000 is below 12%. So whole amount is allowed for deduction. Less 12% exemption up to 12 up to 12% we have to compute. Okay, 12% 19,680 and employer has contributed rupees 18,000. It means below 12%. So all amount are exempted here. 18,000 all amount is exempted. In outer column nil. The next one is the interest. So interest credited. So interest credited to RPF amounted rupees. How many percent? RPF interest credited to RPF at 13%, at the rate 13%, and amounting column rupees 13,000. Okay, 13,000 less exemption up to 9.5%. So here 9.5% into bracket, compute 9.5% exemption. That is here 13,000 multiplied by 9.5 divided by 13. Okay, 13%. So here we get that is the amount is 13,000 into 9.5 divided by 13, 9,500. 9,500 is the exempted interest and remaining balance is taxable. So deduct 9,500 from 13,000, we get 3,500 is taxable. 3,500 is taxable. Then next is given. Okay, next is given, sorry, here next interest. Then a rent-free furnished accommodation. So we have to compute a rent-free unfurnished accommodation. Very easy part to compute because the working note number second, working note second, valuation of rent-free furnished accommodation, rent-free furnished accommodation. So situation is given that is house is not, or the accommodation is not owned by employer. Okay, so here first point is we have to got accommodation is not owned by employer. Okay, according to this basis, according to this situation, we have to compute a rent free unfurnished accommodation. Got it? So here first of all compute a salary, determine a salary for accommodation. Got it? So here salary for accommodation, first point is salary for accommodation. So salary is equal to basic basic pay, basic pay 66,000 plus profit profit bonus. Profit bonus is given, that is profit bonus is 18,000 plus DA applicable, amounted to rupees 24,000. Whole of DA is considered for retirement benefit plus 4% commission. So 4% commission amounted to rupees 74,000. Okay, and remaining, find out the taxable allowances. So I think taxable allowances is not given here. Okay, we taken into consideration all salary. Okay, now compute, make a total of salary, then total is equal to and total is equal to 1 lakh salary is equal to 1 lakh 82,000. 1 lakh 82,000 is the salary. Now we easily compute a rent free furnished accommodation. So here valuation of rent free furnished accommodation, okay, into bracket accommodation is not owned by employer. Okay, then we easily prepare. So here list of the following two, that is make a star, that is minimum of the following two. So here first of all, that is first point a one, that is rent paid by employer. So rent paid by employer is given, that is 84,000, I think so. Here rent paid by the employer is 84,000 and 18,000 is the cost of furniture. We easily compute a. So here rent paid by employer 84,000. Then second point is 15% of salary. So 15% of salary, that is 15 divided by 100 multiplied by 1,82,000. We compute a salary for accommodation. So here we get a amount, that is 27,300. Now list of the following two is the accommodation. So here list of the following two. So list of the following two is 27,300. Got it? 27,300 is the list. So here we get value of rent free unfurnished accommodation. Okay, amounted to rupees 27,300. Okay, 27,300 is the unfurnished value of accommodation. Value of accommodation. Value of accommodation. Now we add the 10% cost. Add value of furniture. Value of furniture. Value of furniture which is given. Value of furniture is given directly. Here cost of furniture is not given, value of furniture is given. So value of furniture is 18,000. If cost of furniture is given, then we compute a 10% cost of furniture, but here value of furniture is given and value of furniture is 18,000. Then we get here we get value of rent free furnished accommodation. So here total is equal to, make the total, and total is equal to 45,300. Total is equal to 45,300. okay, is the value of rent-free furnished accommodation. Got it? Here we get a rent-free furnished accommodation. Okay, remember the valuation of accommodation per visit. So put the figure here. So here value of rent-free furnished accommodation amounted to rupees 45,300. Then next one is given here. Facility is provided, services is provided, that is gardener, cook and watchman. So salary per annum is given directly. Put the figures or salary in outer column. Here gardener, cook and watchman. Salary to gardener per annum salary 4,000. Then salary to cook. Salary to cook 3,600. Then salary to watchman. 900. Salary to watchman 900. Then next electricity bill paid and educational facility. So educational facility exemption is given. So this education facility is the perquisite education facility given to the child of SSC amounted rupees 1000 multiplied by two children multiplied by 12, because 1000 per month, so here per month, so 1000 multiplied by 2 multiplied by 12, that is 24,000. Then exemption, less exemption. So education facility is the perquisite is exempted up to rupees 1000 per month, 12, no restrictions on child. So here two children are allowed, two, so whole amount is allowed for exemption. Okay, whole amount is allowed for exemption. Then in outer column, nil. Nil. Then next, then next, then next, electricity bill paid by employer. So electricity bill paid by employer, taxable. Amounted rupees 3000 per annum, 3000 per annum. Then next one is car facility. So working note number 3, working note 3, that is valuation of car facility. So car is used, car is owned, first of all owned by employer, and expenses paid by employee. Then next one is car is used for both official as well as private purpose. Then next one is car cubic capacity is above 1.6 cc, that is 1.8 cc, 1.8 cc. Then value of motor car is rupees 2400, 2400 multiplied by 12 is equal to 28,800. Here we get a valuation of car perquisite, because the driver is not provided, so we can't consider the driver's salary here. Okay, if the car is below 1.6 cc, then we taken into consideration the 900. So here 28,000. value of motor car, 28,800. Then next lunch then lunch So lunch facility is provided during office hours. So here lunch facility. So lunch facility 200 lunch at rupees 70 each. So 70, 250 multiplied by 70, we get a amount amounting to rupees 17,500. Okay, minus exemption. So exemption is given for the less. Exemption is given, that is 250 mil into 50 each. Okay, so here we get a 12,500 exemption. Okay, so deduct this amount from the 17,500, we get a 5,000 is taxable amount. Then next that is professional tax and life insurance premium. Okay, so make the total, that total is equal to, make the total, and total is equal to, so here total is equal to 2,98,100. That total is called gross salary. That total is called gross salary. Then we deduct less deductions under section 16. So first deduction is standard deduction under section 16 subsection first A, 50,000. Is the standard deduction. Then next one is entertainment allowance under section 16 subsection 2 nil. Then next one is professional tax under section 16 subsection 3. So professional tax amounted to rupees 3,000. Okay, so total deduction is 53,000. Deduct the 53,000 from 2,98,100 minus 53,000. Okay, so professional tax, see the professional tax, amount of professional tax. Here professional tax is 2,500. So here deduct a total, that is 52,500, we get 45,000. 45,600 here, not a 3,000, it is a 2,500. So here 52,500, and the total income is 2,45,600 is the total taxable income from salary. Okay, here we get a total taxable income from salary. Here in this lecture we have to study a problem number 6 on computation of total taxable income from salary. Okay, so here we declare the our unit number 4. We studied in our earlier lecture, that is unit number 4. We compute income and gain from business, as well as we compute income from salary. In our next lecture we are start our unit number 2. Okay, thank you very much.